The scenario that we're going to go through today is actually a really tricky one, and it's not my area of specialism. So I work in employment tax, and this is outside of my specialism. So everything I say about kind of the background to these rules and everything might not be 100% correct, because it's not my day-to-day bread and butter. And my only encounter with this scenario was when I helped the person in particular who came to me with this. And by the time they came to me, they'd done 95% of the research themselves already, and but they just got stuck on one really particular bit towards the end of that research. So you might have already seen the scenario based on the emails and LinkedIn posts that I've sent around already. But I'll just recap on what that is so that everyone knows what we're dealing with here. So the situation involved a partnership that had company A, company B, and company C. I can't remember the exact names because this was like 2 to 3 years ago, but it had multiple companies where partnership owned 100% of the shares in all of those companies. And the person who came to me had basically said they'd been looking into this for like ages. They came to me and they showed me this massive spreadsheet that they created with all these links and places that they'd looked and information that they'd found to try and get to the bottom of this. But they got to one part in particular where they were just completely stuck and they were going around in circles at that point. And they just came to me and said, "Do I have any suggestions on like what to do next, basically?" And so I'm going to share the legislation in particular that they got to and where they'd gotten stuck. So there's very similar wording in three places, because I mean a bit of background based on what I know about partnerships and this anyway. So the way that partnerships are taxed, broadly speaking, anyway, is that the people who are the partners, the members of the LLP, are taxed on profits through income tax, basically, and the gains that the partnership makes when it sells any assets is also taxed on the partners individually. And so there's rules around this for capital gains tax. There's rules around this in the CTA Act 2009, and there's also rules around this related to income tax. So there's three different pieces of legislation, and all of which use identical wording within them, which is what was causing the problem in this case. Whenever I start doing research on a scenario where I don't know much about the tax rules that we're dealing with, or potentially nothing at all, then I always want to try and get a bit of background on those rules first, because I think if you go in completely blind, you're going to find it very difficult and very confusing to do. So I always start by getting a bit of background first and a bit of a general understanding of the situation that I'm dealing with. And so what I'm going to do now is I'm going to go to the legislation bit that the advisor showed me on screen, and then I'm going to use that to start trying to find some basic high level information that can start giving us a bit of background to this task, so then we can move it forward basically. My preferred choice is to use Krona I, so hopefully you can all see that on screen right now. Just double checking to make sure that is the case. Yes, it looks like you can see that, which is perfect. And I always go, when I know the actual legislation in particular, I will go to the legislation finder here. And what you can do then is you can just find the particular piece of legislation that you're working with and go straight to the section that you want to look at. So in this case, I have got the Capital Gains Taxation of Capital Gains Act 1992, which is here, and the section number is 59A. So last night, just as a bit of preparation before this, I made sure that I got all the section numbers together. And I won't go through every bit of this here live because it's really complicated wording. But there's one bit in particular which, out of all of this, was causing the difficulty for the advisor when they came to me. And the bit in particular that was causing them difficulty was basically this word in here that says, where a limited liability partnership carries on a trade or business with a view to profit. In particular, this small bit here. So the advisor couldn't figure out or couldn't find any like definitive answer around what is considered to be carrying on a trade or business with a view to profit. And the whole scenario, the whole piece of research that they were doing depended on the answer to this. And the impact of it is if the limited liability partnership was doing this, then the partners and the partnership would be taxed like a partnership. Whereas if it wasn't, it would be taxed more like a company. That's my basic understanding of the tax rules that are in play here. As I say, I'm an employment tax expert, not an expert on partnership taxation. But because we've now got this piece of legislation here, what I can do in Chrome, and you can do this in Tollers and other resources as well, is you can use this to start finding other guidance and other information that relate to this situation here. And so in Krona, what I often do is if I want to look at some of the other Krona's commentary, then I will open up this related commentary link here. And what this then returns is guidance that is related to that bit of legislation that I was just looking at. Because I don't know much about the rules in play here, I would never go to in-depth guidance because I find personally that in-depth guidance is very confusing when you know very little about the topic. I only go to the more in-depth guidance once I have a bit of a basic understanding. So in this case, I will use Corona's quick overview guidance to just try and get a bit of background and a bit of familiarity with what these rules are about. So having a look here then, so what I've done by clicking on this is I've narrowed down Corona's search results to just guidance that falls within their quick overview guidance, which should be simple and easy to understand, at least in comparison to the in-depth bits anyway. And because we're just looking at capital gains tax, then we're in the Capital Gains Tax Act. I'm going to just have a look at some of the basic content around partnership gains in particular and partnership assets. So I'm just going to open a few of these links here now as new tabs. Whenever I do research and I'm trying to find like useful information, I don't just click on one page and then go look at it. I try and open numerous pages that I think are related, and then I'll go through them one by one. And I just find that that structure helps me to break down what is complicated into something more simple and more manageable. So the other stuff for now doesn't look too useful based on the names and what I'm looking at here. So I'm just going to have a very brief look now at those two pages that I just opened. So this is to do with introduction to partnership gains, so capital gains in particular. And what it says is tax in respect of chargeable gains accruing on the disposal of chargeable assets is assessed and charged on the partners separately, and partnership dealings are treated as dealings by the partners and not by the firm. Okay, so based on what I know about this scenario, essentially what that's saying is when the partnership sells or disposes of an asset that will be subject to capital gains tax, then it's treated as a disposal by the partner as an individual human rather than the partnership as like a corporation or as a separate legal entity. It says the practical application of CGT to partnership transactions is detailed in Statement of Practice D12. So that looks like it's going to be some really useful guidance for me to look at. So I'm just going to open that on a separate tab, and I'm just going to make sure this at the end after the ones I've already opened so that I don't start jumping around too much at this point. It says the following paragraphs outline the main points of that practice statement. However, the acquisition or disposal of an asset is deemed to be for a consideration equal to market value where the transaction is not made at arm's length, and the transaction is not at arm's length if it is made between connected parties, persons. A person is entirely connected with these people. Okay, so actually, in terms of what we're trying to get to the bottom of in this research case, this bit actually doesn't seem to be that relevant because all we're trying to figure out is whether the partnership is carrying on a trade with a view to profit. That's the question that we need to answer. But just reading about this a little bit now, it's giving me a bit more familiarity with these rules and kind of knowing a little bit about them. I'm just going to have a very, very brief look at this statement of practice D12 just to see whether that mentions anything at all that at a high level, quick glance that seems to be useful. So I'm going to look for some of the word in here, like view to profit, for example, because this is like almost a concept in its own right. And I think trade or business are probably concepts in their own right as well. So I want to try and break it down and find information that relates to each of those things separately. And then I will be looking to piece it together, a bit like a jigsaw puzzle, I suppose, to get to the answer. So let's have a look at this statement of practice then. And I'm just going to open up a search bar here by holding down CTRL plus F at the same time. And I'm typing the word profit in it originally just to see whether what comes up when I search for the word profit. So this here doesn't seem to be talking about with a view to profit in particular from a brief glance. So I'm just going to skip past that for now. Again, that doesn't look like it's got any comment on view to profit again. None of these do at all, actually, the ones that I'm looking at right now. If I just type in the word view, does anything come up there? Well, the word review does, which again isn't relevant. Review, review. So nothing else seems to be coming up there. So I could look through this page now to try and get a bit more background on these rules and a bit more of an understanding of it. But I'm not going to do that on this session because I don't think it's necessary. And I'm going to start focusing on now on trying to get to the bottom of the tricky bit, which is the bit that the advisor came to me with and wanted some help with. So when it comes to legislation, you should always first be looking to see whether the terms that it uses are defined somewhere within that legislation. So basically, I want to see whether it defines the words trade or business within this legislation and whether it defines what view to profit means. I have an inkling that it's not going to do that based on the conversation that I had with the advisor a few years back, but I'm going to start having a little bit look at that now. And so a way that I can do that is by using something called Google operators, which I will demonstrate now. And to use Google operators well, I what Google operators will allow me to do is basically search within this piece of legislation and just see what pages it returns that actually include the word trade or business or view to profit in particular. So it'll kind of streamline it and do a super specific search throughout the whole act for me, which is what I think will be helpful to see if there's any definitions around this. So that's what I'm going to do first. If I can't get any success based on that and I can't find any particular definitions, then what I'm going to do is open up my search a bit and I'm going to start looking in some other areas. So, for example, guidance. Does any HMRC guidance exist that elaborates or explains what is meant by trade or business with a view to profit? Um, if not, is there any commentary? So, like Tully's commentary, Corona commentary, is there anything around that that explains what is meant by carrying on a trade or business with a view to profit? Is there any case law that does that? Are there any tax articles that do that? So, what I'll be trying to do then is find out as much as possible to try and figure out exactly what is meant by that terminology. And I could end up landing on something that is like a gold mine and it's like the perfect piece of information for it. Most of the time, though, with tax research, that doesn't end up happening. It's a bit more tricky than that. So first off, anyway, I'm going to do that search with the Google operators that I was just talking about. So I'm going to find section 59A um, in the legislation on the government websites access to that though, because I find that it's more useful and helpful for this. Okay, so I'm not going to fully explain how to use Google operators on this because that's like a separate topic in its own right. But what I'm going to do is just quickly create a Google operator search for some of this terminology within this act in particular. So to do that, I just need to find out the link that I need to use to refer to this act within this website, which it looks like it's this link here. I'm going to search for the terms trade or business first and just see what comes up when I search for that. Anything at all. Okay, so we have got some searches that are returned here. Not a load, which is a good sign in some respects because it's not going to take us ages to go through and look through all of these. But it's bad because it suggests that terminology isn't used much through this piece of legislation in this act in particular. So I'm just going to open these now in a separate tab and a separate kind of browser entirely because this is like a certain branch now that I'm looking at in particular with this research. I'm looking purely within the Capital Gains Act 1992, sorry, the Taxation of Chargeable Gains Act 1992, and I'm searching for just particular terms that come up. So I'm going to open all these tabs and have a quick look in each of them to see whether any of them seem to be helpful in terms of figuring out what that terminology means. Okay, so with a let's type in the word profit actually first. So nothing comes up around the word profit there. The word trade or business. So it looks like section 59, which is one section before 59A, uses the word trade or business. Um, Again, it's just using it as if we already know what that's meant to mean, though. So it doesn't look like that's going to be helpful. So I'm just going to move on for now and close that one off. So we've got section 8 now. So election for transparency. Let's see what it says here about trade or business. Okay, so there's only one return again for that. And again, it's just using this terminology as if we know what it means. It's persons carrying on trade with a view to partnership. What I'm looking for is something that says a person is carrying on a trade or business in partnership if or in these circumstances. I'm trying to find something like that, basically. We're not really getting any hits on that at the moment. So I'm going to move on to the next one and see whether there's anything helpful again here. Again, it looks like it's just going to be using the terminology. Again, just using the terminology, not defining it. So nothing seems to be helpful there. So I'm going to close these two tabs as well. I think section 8 was one we just looked at. So this is the same page. 224 looks to be new. So I'm going to quickly just search for that one. So this is using the word trade or business, but in a slightly different way, but again, doesn't seem to be defining what it means here. So again, I'm going to close that. 59, we've already looked at that one. That one already came up again. This one looks new. So let's have a quick look in this one. And wow, this has got a lot of reference to the word trade in it. So if I was doing this now for real, I'd go through and check every single one of those and just see whether any of them are helpful. It looks like actually it's all to do with this whole part five of the Taxation of Chargeable Gains Act. So it looks like there's a lot of sections in here. Um, This isn't within the same part, though, I don't believe, as the section 59A. I'm just going to quickly check that. So the way that legislation is broken down is it's broken down into, well, acts are anyway. You first off have parts, and within parts you have different chapters. So I just want to see whether this 59A sits within the same part as that I've just opened on that other page. So this is part 3, it says here, and this over here was part 5. I believe. Yes, so part 5. So it's a different part of the act. And so it's not going to be directly relevant to part 3. It might give some stuff that helps us understand what is meant by part 3, but it's unlikely. But if I would continue to do the research and I couldn't find anything else around trade or whatever, I'd come back and look at this one in a bit more detail. But right now, it feels like it would be a bit of a trap to go down this route, a bit of a time suck. So I'm just going to not go down that one for now. 59, we've already looked at. Section 13, we've not looked at yet, but again, let's have a quick look. Okay, so nothing is coming up that explains what is meant by trade or business with the view to profit. That terminology is used a lot through the Capital Gains Act we've just seen, but it doesn't tell us exactly what is meant by that. And so my suspicion at this point is that it's not going to actually explain to us exactly what is meant by that, which means that basically the legislation and the wording used in it is going to take its ordinary English definition. And what I would do now if I was doing this live properly in the job is I would do this exact same search that I've just gone through here, but I would instead look for view to profit instead to see if anything comes back on that one. You can see there's a similar amount of search results. I could go through those one by one and see whether it helps explain what is meant by that. I'm pretty sure that it doesn't based on memory and the fact that the other advisor got stuck with this. And so I'm going to kind of move on to the next bit of trying to get to the bottom of this now. So essentially, what we would have done by going through this bit here of the legislation, looking for it, we're basically concluding that the legislation itself doesn't make it clear what is meant by carrying on a trade or business with a view to profit. So that means that we're probably in a subjective area where there's no clear answer. But what we need to try and do is be able to substantiate and justify what we believe to be the answer. And so the first thing I'm going to do next is I'm going to start looking into HMRC guidance a bit to see whether they've got any commentary or any guidance around this, because they could have, say, an example in their guidance. They could explain what it means enough that we could rely on it in this case, even more so if it gives us the answer that we want. And from memory, the advisor wanted the answer to be that they were carrying on a trade or business with a view to profit. So I'm going to have a little look now in HMRC guidance. But obviously, first off, we now need to find the HMRC guidance to go and have a look at. The way I want to start doing that is on Krona, just like before we had a look at the related commentary, which is Krona's commentary. I'm going to open up this tab here, which is related HMRC manuals. I'm just going to tidy this up so that it makes it easier for us to be organized with doing this. Okay, so we've got 9 pages that seem connected here of HMRC guidance that relate to section 59A. They all look like they're part of the same manual, HMRC manual here, which is the partnership manual by the looks of it. Oh, capital gains manual as well is returning some things that might be useful. So there's two manuals that seem to be relevant here. That is the partnership manual and the capital gains manual. I'm going to open up a few of these tabs, the ones that I think are going to be potentially helpful here. Um, and I don't expect this to take us to like the perfect page straight away, but it's going to put us within the general ballpark within the partnership manual in terms of where we need to look and start exploring what information is in there. That one doesn't seem relevant because we're not dealing with liquidations here, so I'm just going to ignore that and move on. This looks specifically to do with rollover relief, which we're not looking at in particular here. So I'm going to ignore those as well for now. And just for now, I'm going to focus on the partnership manual. And the reason I'm going to focus on the partnership manual is because this one seems to be the most relevant. The legislation that we're looking at is entirely to do with capital gains tax for partnerships. So that feels like it's going to be highly relevant in this case. And the titles and the little descriptions under these ones here to do with the capital gains manual don't seem to give me the suggestion, at least anyway, that they're going to be helpful in this case. And so I'm just going to gloss over those ones for now. But I just know that I can come back and have a look later if I'm still getting really stuck and not uncovering anything helpful. I actually don't find using HMRC manuals in Krona that helpful. So what I'm going to do is I'm going to just go to this manual page outside of Krona's system and just go straight into HMRC's manual on it. Okay, so let's have a look what this says then. And bear in mind we're going into this guidance with the pure aim of trying to figure out what is meant by carrying on a trade or business with a view to profit. That is our sole purpose pretty much of looking through this. So that's what we need to keep at the top of our minds as we're reading things here. So let's just see what this says to begin with. So it says detailed guidance on partnership specific capital gains issues is available at CG 2700 onwards. Okay, so that is this here. So I'm just going to open that in a separate tab. In particular, you should be aware of statement of practice D12, which is actually a statement of practice that Krona referenced earlier as well. So I'm just going to reopen that because that's two times now you've had reference to that, which is suggesting it's going to be relevant. And this explains how HMRC applies relevant legislation in practice. As a brief introduction, transactions in partnership assets are treated as made by the partners rather than by the partnership. Tax on chargeable gains accruing to the partners on disposals of their interest in partnership assets are charged on the partners themselves, not on the partnership. Note the disposals of a partnership's chargeable assets should be disclosed in the partnership tax return with the results or gains. Okay, fine. So none of that's particularly helpful at this point. But what we do know now is that we've got particular guidance now on capital gains for partnerships at CG 2700 onwards. Or I've just realised, by the way, that when I said this up here, I was wrong. This is the partnership manual. So actually, what I'm going to do is I'm going to open up the capital gains manual too at this section here, just in a different browser for now. It's something that I can come back to and have a look at in a bit. I'm just going to have a look now whether any of the headings in this contents page here, which is here, look like it might be helpful for the situation that we're dealing with. Again, trying to find clarity over what is meant by carrying on a trade or business with a view to profit. Just from a quick look here, it doesn't seem like any of this is specific to partnerships in particular. It looks like it's talking about all the different taxes that might come into play here. Just because we were just in capital gains a second ago, I'm going to go back onto this one. That was what we've already read, I believe, and none of this seems to be relevant. So because it pointed us to the capital gains manual, I think it's probably going to be more useful for us to go there for a second. So I'm going to go to that one and see what it says in here. So this is referring to section 59, which from memory that didn't have the exact same word, it just had trade or business in it from memory. Does this in particular refer to limited liability partnerships as opposed to just normal partnerships? It's not clear to me at the moment. I think it's referring to just partnerships though, because section 59 is just to do with partnerships. Aha. So partnerships, limited partnerships, unlimited liability partnerships. Okay, this seems more relevant. So let's go here. And let's go specifically to limited liability partnerships on this page, since that's what we're dealing with in this case. So it says there are bodies corporate under the LLP Act 2000. LLPs combine the organizational flexibility of partnerships with the benefit of limited liability for their members. As bodies corporate, they are subject to certain aspects of company law and have corporate personality distinct from their members. Okay, fine. Um, that's not particularly helpful at the moment. It's just background information. Um, so this here refers to section 59A, which is the section that we started in. So I'm hoping now this is going to contain some useful information for us. So it says TCGA 92 applies where a LLP is carrying on a trade or business with a view to profit. Okay, great. So it's actually now referencing the wording that we want to understand, basically. It says it mirrors section 59, which is to do with just normal partnerships, in that it provides that any dealings by an LLP are treated for CG purposes as dealings by the individual members, and therefore each member of an LLP to which this applies is regarded as owning a fractional interest in each of the LLP's assets and not an interest in the LLP itself. Okay, so that doesn't give us any extra help at this point because we're just trying to figure out the answer um, to this point here. But what we now have got is a page in the manual that actually uses that terminology. But again, it's not telling us what it means. It's just using it as if we already know what it means. But I feel like now we're in an area where we can start getting some extra good information from this. So essentially what we need to do, and obviously I'm not going to be able to do all this live now because we're running out of time, but I would now start going through each of the pages here that seem to be that might include information or that I think might include information that explains to us what with a view to profit means and what it means to carry on a business or trade. So let's have a quick look at some of these things now. I'm going to open a few different ones that I think might contain useful information. That seems generic enough that it might include something helpful. I'm not going to open these two because they look like they're then moving on to something specific, like almost assuming again that we know what with a view to profit means. This looks like it talks about what actually happens when there is a disposal rather than figuring out whether we're using the right rules in the first place. So nothing really jumps out here to me as really helpful here. And the whole problem we have is we're just trying to find out what that terminology actually means because in the example that we got, it wasn't clear to the advisor in question. I'm going to have a look at the one that I opened up over here then to see whether it says anything extra helpful. So this is the only page I've really found at the moment that I think might be helpful. So section 59A. So I guess this is back to the right section, which covers on a trade or business with a view to profits. This is again just looks like it's telling us what actually apply, what happens once it does apply. So I'm just looking for information that helps us understand again what is meant by trade or business with a view to profit. Again, I can see nothing that is helping us to understand what is meant by that at the moment, which is really frustrating, but let's carry on. Still can see nothing else that seems to be helpful. Well, we've got some examples. So did the examples have anything helpful in them? Okay, so again, this example is just assuming that they are trading with a view to profit, which is unhelpful because that's not what we're trying to figure out here. On 1st November 2024, again, it just assumes that they are trading with the view to profit. So this is annoying, right? So what this is pretty much telling me at this point is that we are going to find it. It's going to be really, really difficult to get any clarity at this point, I think, on what is actually meant by trade or business with a view to profit, which is a mighty shame. So there's a few different things that I'd be thinking to do here. So one, we can carry on doing research, but maybe pivot into some Tolley's commentary or to Kroner commentary, and again, just look for information that relates to that wording. We can look for similar legislation or legislation that uses similar wording to what we've got there to see whether there's any clarity around that. We can look for cases that relate to this section to see again whether they provide any elaboration on what is actually meant by that, and just look for credible information that helps us understand more about this in particular. The one other thing I haven't mentioned actually is explanatory notes. So most legislation is published alongside explanatory notes, at least nowadays anyway. Less so in the past, and this act being a 1992 act means that it's probably quite unlikely that they've got any explanatory notes that we can see. And what explanatory notes do is they explain a bit more about what is meant by the rule and the terminology in it, and it can give us a helpful insight into what is meant by it. Um, I know we focus very much on the capital gains bit of this right now, but there's actually a section within the Corporation Tax Act 2 that uses the exact same wording. It's section 1273 CTA 2009. The advisor that came to me with this had already found that too. And there's another section that uses the exact same wording too, which is ITT OIA section 863. So we have got three different sections within three different tax acts that use that word in. And so I would also be going to look in both of those acts to see whether they provide any elaboration or context on what is meant by trading with the view to profit. But basically, at this point, we've just got to keep going along that path and look for any credible, useful information that helps us. Hope that we land on something that's really useful. And if we don't, we're going to have to start forming some views based on what we have read and what is available and based on the circumstances that we have in question. Now, let's just hypothetically say that this is a super complicated research task that whatever you do, you're never really going to be sure on the right answer, which does happen sometimes, right? Because there is just nothing that provides the level of clarity that you need. There's an option that you can do here on the job, which is that you can suggest that the client gets an opinion from a tax barrister, for example, or something similar to give them some certainty about this. And that does happen sometimes. I don't know whether it would be necessary in this case or not without doing the further research. But I know at this point that it's going to take me probably a good few hours of reading a lot of information and looking at a lot of different places to try and get more clarity about this. So this does happen sometimes, and we've just got to do the best that we can with it, which means looking at as much information as possible that directly connects to trying to find clarity around what that wording is meant. So in terms of going through the scenario, I'm going to stop there and we'll move over to a Q&A in just a second. So you can ask any questions that you have or just start having a chat if you want to. I'm going to stop sharing my screen for just one brief moment. So just before we go over to the Q&A, so what we've just done in this session is I've started to tackle this complex bit of an overall bit of tax research with me explaining what I'm doing and why, and also what my current plan would be to finish this research and try and get to the answer. And this is a real scenario that a tax advisor, actually a CTA prize winner, asked me for help with about 3 or 4 years ago. And to get to this point, the advisor did have to do a lot of research to figure out what the crux was to this entire research task. And it actually was dependent on this exact wording that we've just focused on. But how do you go from having the query to getting to the point that the advisor did and then taking it all the way to getting that answer, regardless of the scenario? But so you can do that, I've established a 5-step process that you can use to do this. And by knowing these steps and how to do them well, you'll be able to tackle tax queries more quickly and easily because you'll know places to start your research. You'll have improved confidence that what you're doing is the right thing when you're researching. You'll procrastinate and you'll worry less. And all of these steps and how to do them, I do teach in the tax research masterclass. And a recent attendee said to me within about a month of doing the masterclass that she was now easily answering queries that she used to defer over to her colleagues and that she also spotted a potential £2 million tax problem for one client. She provided a solution to that to her tax director, who decided to use that solution, which in her words felt brilliant. And before the masterclass, she was actually thinking about leaving tax because she felt too stupid to do these things. And this was resulting in her feeling stressed a lot, especially when researching. But now she's proved to herself that she can do it and she doesn't feel stupid anymore. And in fact, she's doing really well with it. And I couldn't be happier for her. So if you do want to become good at researching yourself and improving your overall technical ability, the masterclass is a streamlined way to achieve that. You may already be good, but I suspect you can probably be better if you want to be. You can go to the taxprofessionalspodcast.com/TRM to get further details on that. And you can also join through that link as well if you want to. And the next one starts on the 16th of March, 2026. So I'm just going to put that link in the chat now, and then we will open up to the Q&A section, and I'll allow people to unmute their mics as well if they want to. If you do want to speak through your microphone, can you just put your hand up and just make sure that we're not talking over other people then too. Should just give me 2 seconds to do that. So you should be able to unmute yourselves now. Cool. Let's go on to it then. So if you've got any questions, feel free to put them in the chat now or unmute your microphone if you do want to speak. So, first question that's come in says, would I consider the time spent on searching for what is a trade or business with a view to profit, even though the search above proven successful to billable time? So, this is going to really depend on the scenario. So, from memory, there was quite a lot of money at risk here based on this question. And so, what I would be doing in that situation is once I've realized that it's going to be really time consuming and difficult, I would stop at that point. I would go to the clients and tell them what's happened so far and the issues you found and what the impact of it is for getting it wrong. Then I would suggest to them that we look into this in more detail to try and get them to the answer, but acknowledging that it might still be subjective in this case. I'd also offer the option at that point to consider getting a barrister's opinion or something like that. But you are right, you've got to be careful before you sink a lot of time into this. Someone like me personally, if I encounter this on the job, even though I can't charge it and even though I probably couldn't do it in working hours, I would spend time afterwards trying to get to the bottom of it because it would annoy me that much. But you have got to be careful around that. Depending on what grade you're at, I would go to your manager to suggest something. But you're right, you should pause. But before you pause, you need to be sure that you know what the crux of the answer is. You know that it's going to be difficult to get to the answer to because you've already started looking into it. So hopefully that makes sense. But generally speaking, yeah, I'd go to the clients and just explain to them what the situation is and, propose to do the other work and what the fee would be. Yeah, it's a hard one for sure as well. It's even harder when you don't know whether you're actually going to be able to get to the answer or not, which is definitely going to be the case with this one. We've looked for 30 minutes and we've not really gotten any further in terms of getting clarity around what that wording means, which is a mighty shame. But yeah, case law would probably give us something at least moderately helpful, even if it's not directly on that section, but it'll give us probably some clarity around what a trade or business is and when something is carried on with a view to profit. So, Martin, from memory, I don't think they had what you would consider to be a normal trade or business. I think all they did was have ownership of multiple different companies. I think they might have, from memory, be charging maybe management charges or something similar, but their entire business was around owning these companies and doing things for these companies. Um, I don't believe they shared an awful lot with me around that at the time, but it was 2 or 3 years ago now, and I really cannot remember what it was around that. Is this something that you think is a more straightforward scenario than Martin, and that they were potentially getting their knickers in a twist with this one? Or do you think that there are going to be situations where this is going to be tricky in real life?
Well, thanks, Jack. That was really interesting. I guess I would, maybe just flip it and say, are they an investment business? And often investment businesses are excluded or are treated slightly differently, and that might take you on a slightly different tack, from the first instance. So I guess I was wondering if they thought they were a charity or something, in which case, maybe it would be a little different. But yeah, if they think they have an investment business, and that would potentially lead you to look at that in the first instance to see if an investment business is specifically excluded.
Yeah, interesting. Yeah, I think it definitely wasn't a charity, that's for sure. It would definitely had investments because that was the main point I remember talking about in other companies where it owned 100% of the shares. So I imagine it was that they felt like it was more like an investment company and that wasn't necessarily carrying on a business or a trade, although they had arguments for kind of both sides of it. And obviously, when you've got arguments for both sides, that typically suggests that it's subjective, right? When you can't find something that puts you either side of the line.
Yeah, yeah, for sure. And I don't know what the difference in the tax treatment would be. Presumably, you would still pay tax on any gains and income accrued. I guess it's just whether you split it between the partners or maybe what head of income it comes under.
Yeah, so I believe if they were carrying on a trade or business with a view to profit, then the capital gains would have been on the individual partner separately, so they'd have had to complete their own returns, I believe. Whereas I think if they weren't carrying on a trade or business with a view to profit, then it's more like the way that it works for companies. So I think it's corporation tax on capital gains in that case. And so I think one, it impacts the reporting. And two, I think it would impact the amount of tax because I believe the rates are different for individuals versus companies. I mean, you can probably chip
Yeah,
in if that's not right because it's not my area.
yeah. If it was a couple of years ago, certainly you would have, you know, corporate tax. It's just that, it's chargeable gains and just at the corporate tax rate, whatever the marginal rate was versus your kind of individuals are at different rates, aren't they? Interesting. Yeah, yeah. I just yeah, I wondered if there was something. I guess that would have been maybe the first thing I would have said. What makes you think they don't have a trade?
Yes, yeah, exactly.
Yeah,
And they probably did talk about that at the time, but honestly, I just can't remember. What all I could find in terms of like audit trail was an email I sent to them afterwards saying, "I'm really sorry. I felt like I was really unhelpful in that chat that we had, and so I've had another look for like an hour or so afterwards, and this is what I found."
yeah,
And I think I did find some guidance from memory that was using like the word with a view to profit, but not exactly in this context. And I suggested that they look a bit around that and see whether they think that's helpful.
yeah. Oh,
I don't
great.
actually
Thank
mind
you.
sending it around after this, that what I sent to them afterwards. The only reason I haven't showed the email here because it's got their name in, and I haven't asked them for permission to share that with people. But I can send it around anonymously afterwards if you think it'd be helpful. I've got a few more questions. Liv, I'll come to you in just a second. I'll just address Ben's one first. So the HMRC manual does not define what a trade or business. Once you have that at the back of your mind, then you have to look for case laws, which might save you time on the subject matter. Probably you rely on the badges of trade. Yeah, I don't know whether that is super relevant or not, because that's to do with sole traders, I believe. But if it does use like, are they carrying on something with a view to profit, in that too, then yes, absolutely, potentially something you could use there. Um, but because we know now we're not going to find something that's super relevant by the looks of it, we need to find things that are closely connected and use that to substantiate whatever we believe the answer to be. Go on, Liv, then. I'm guessing you want to speak since you've raised your hand.
Yes, hello. It was my question was, what are the main factors that sort of help you to decide where to stop when you're doing the research? Because I find it being like new to tax, I almost find it difficult sometimes searching for something that actually just doesn't exist and kind of doubting myself that actually it is out there somewhere and I'm just missing something that's glaringly obvious. Because if these phrases are used in multiple sections in different legislation, you would think it would be an obvious thing to have that definition in there. So at what point, like, and what factors do you include to know where to stop?
Yeah, it's probably one of the hardest things to be honest, because it's when you're trying to basically prove that something doesn't exist, you can't do that for sure, right? Because you always think I might have missed something.
Yeah,
So what I do is I look in all of the places that I think might include something obvious first. If there's nothing there, then I accept that I'm going to have to look for a long time now to look at probably a few different areas to see whether I can find anything else that might be slightly helpful. So that I'll be reading through a lot of legislation, a lot of guidance, a lot of commentary. So I would just have to open up that research to do a lot of reading then. And then if I still find nothing after say 3, 4 hours and I've looked in loads of different places and there's almost like no avenues left to look into, that is when I would stop. Practically, if you need to stop earlier than that, you can take a bit of a view and just be like, well, I've been looking at this for like 2 hours now. I can't find anything else. I'm just going to go back to my manager. I'm going to say what I've done, that I've spent 2 hours on it, that I've looked in all the different places. Do they have any suggestions? And do they actually want you to do anything further or do they want you to stop at this point? And so I think earlier in your career, I would definitely rely on them to give you a steer for when to stop and when to continue as well.
cool. Thank you.
No problem. That looks like it's the last one that's come in. We're actually at 1 o'clock now, but if I'll just wait another minute or so, see if anything else comes through. But if not, I'll call it a day there on this one. But thank you everyone for joining. I appreciate it, and particularly thanks to the people who asked a question because that helps to just make this a bit more engaging and a bit more useful. But thank you everyone. Lovely. It looks like no one else is asking any questions, so I'm just going to end the webinar here then. So thanks all, and hopefully see you on the next one.